In one of our previous videos, we talked about Berkshire Hathaway's sale of shares in tech giant Apple. We told what reasons prompted Warren Buffett to sell Apple shares. Today we will try to explore the underlying strategies and tactical objectives of Warren Buffett. All investors interested only in shiny growth stocks can recognize that Warren Buffett's approach has merit, as his Berkshire Hathaway has been consistently outperforming the S&P 500 index for a long time. One can't help but wonder if too many investors are underestimating the true potential of Berkshire Hathaway. Is it capable of consistently providing them with a lifetime of huge, long-term profits? Stay tuned and you will soon find out for yourself. So, the Berkshire Hathaway that many people don't know. Here is the holding company Berkshire Hathaway that everyone knows. It owns stakes in a number of publicly traded companies including Apple, Coca-Cola, Bank of America, and many other well-known companies. It is possible that many have even owned some of these blue-chip companies from time to time. And there is Berkshire Hathaway, which many may not know about. This conglomerate also owns many privately held businesses offering Duracell batteries, Shaw Flooring, Geico Insurance, Clayton Mobile Homes, Acme Brick Company products, just to name a few. Some of these businesses work with each other. Others exist on their own. All of them, however, ultimately contribute cash to Berkshire Hathaway's net income. In a fairly typical 2023, the company had an operating profit of $37.4 billion, not including gains on its stock. Investors should also know that Warren Buffett has a unique intuition and prefers to just sit on an ever-growing cash hoard rather than invest it in private or public companies. As of the end of Q3 this year, Berkshire Hathaway boasted $325 billion in cash or cash-like investments, roughly a third of the conglomerate's current value, as Warren Buffett and his associates currently can't find anything they like enough to add to Berkshire Hathaway's portfolio. So, we're still not one step closer to answering the question, what are the prospects for Berkshire Hathaway's new shareholders? We'll find out soon enough. That's where the fun part comes in. Berkshire Hathaway's approach is clearly working better. In many ways, Berkshire Hathaway is like a traditional mutual fund or even an actively managed exchange-traded fund, or ETF. That is, its managers manually select stocks and have the power to decide if and when to sell them. However, Berkshire Hathaway is actually less like a mutual fund than is commonly thought. How so? Most conventional funds operate under policies that require a minimal amount of diversification, such as limiting the relative size of any single asset. But Berkshire Hathaway doesn't do that. In fact, Warren Buffett admits that he doesn't worry too much about portfolio diversification. He just buys stocks of companies he likes. Many traditional mutual funds also make it a point to stay mostly invested, even if their managers know there aren't many good opportunities because of the unfavorable economic backdrop. Again, Berkshire Hathaway has no such problematic rule. Finally, while it's not impossible for a fund to invest in private businesses, in most cases funds limit themselves to public companies. Berkshire Hathaway likes to be able to access private opportunities that are otherwise not available to ordinary investors. In other words, Berkshire Hathaway invests in ways that most people would probably prefer if given the opportunity. It also invests in ways that most mutual fund managers simply cannot. And that's critical to long-term performance. Now, we're getting closer to answering our main question. Despite being well-trained and well-paid, the average mutual fund manager doesn't actually outperform the broad market. Data regularly updated by Standard & Poor's shows that over the past 5 years, 77% of large-cap mutual funds available to U.S. investors have performed worse than the S&P 500. The situation doesn't get much better with smaller market capitalization or other time frames. Now, isn't it hard to guess who or what has outperformed the S&P 500 over the past 5 years? If you assumed Berkshire Hathaway, you are correct. Indeed, Berkshire Hathaway has regularly led the market for decades on end, despite occasional minor downturns. In fact, for almost any long-term period from the 1990s to the present, Berkshire Hathaway's earnings have been roughly double that of the S&P 500. This edge over the market is due to a combination of savvy stock picking, patience, and great investment flexibility that most, both amateur and professional investors, simply don't have. Berkshire Hathaway's cash reserves hit a record $325.2 billion. Berkshire Hathaway's cash holdings reached $325.2 billion in Q3, a record for the conglomerate, as Warren Buffett continued to refrain from making major acquisitions while cutting some of his most significant holdings. Berkshire Hathaway has again significantly reduced its holdings in Apple Inc. The Omaha, Nebraska-based company said in a statement a couple months ago. Its stake in the iPhone maker was valued at $69.9 billion at the end of the quarter. Berkshire Hathaway first disclosed its stake in Apple in 2016 and spent $31.1 billion on 908 million Apple shares, which it held until the end of 2021. In May, Warren Buffett said Apple was likely to remain Berkshire Hathaway's main asset, emphasizing that the motivation for the sale was tax issues. In the current environment, I'm not at all opposed to building up a cash position, he said at the annual shareholder meeting. I don't think Warren Buffett has ever felt comfortable in the technology sector, Jim Shanahan, an analyst at Edward Jones, said at the same time. Kathy Seifert, a research analyst at CFRA, believes Berkshire Hathaway's stake in Apple was starting to become an outsized stake in its overall portfolio. I think it made sense to soften that exposure a little bit, she said. The company has struggled to find ways to utilize its cash hoard as Warren Buffett found market prices too high to find attractive deals. At the annual meeting, Buffett said Berkshire has been slow to spend, unless we think we're doing something that has very little risk and can make us a lot of money. Shanahan said the high yield on cash assets sets a slightly higher bar for other opportunities. Interest and other investment income in the conglomerate's insurance business more than doubled to $3.5 billion in the 3 months through September. Buffett, 94, has used some of his cash reserves to buy back some of his own shares, though even they have become more expensive recently. Berkshire Hathaway shares are up 25% this year, boosting its market value to $974.3 billion. On August 28, its market capitalization surpassed the $1 trillion mark for the first time. Last quarter, Berkshire declined to buy back its own shares for the first time since changing its policy in 2018. I think investors will be disappointed by that, Seifert said. Berkshire Hathaway's operating profit fell 6% from a year earlier, to $10.09 billion, as insurance underwriting revenue fell sharply. The company also recorded a foreign exchange loss of $1.1 billion during the quarter. Corporate insurance underwriting profits fell 69% to $750 million from $2.4 billion a year earlier due to higher losses at Berkshire Hathaway Primary Group. Berkshire Hathaway estimated that Hurricane Helen's impact on its earnings in the quarter was $565 million. Hurricane Milton is expected to result in a pre-tax loss of $1.3 billion to $1.5 billion in the fourth quarter. While earned premiums rose at auto insurer Geico, they fell about 5.6% at Berkshire's reinsurance business. Seifert believes this could signal Berkshire Hathaway's adoption of a de-risking strategy this quarter. However, the question remains: can Berkshire Hathaway secure an investor willing to buy its stock for a lifetime? The answer depends a lot on what it means to secure it for life. If he wants to turn $10,000 into $5 million in less than 30 years, then no, Berkshire Hathaway is not inclined to do that. Over the past 30 years, these issuer stocks have posted average annual gains that are only slightly higher than the S&P 500. Their market performance is largely the result of outperforming the market by just 1%, but on a consistent basis. And if turning $50,000 over 30 years into $1.7 million is momentous for an investor, it's not only possible, but likely. Berkshire Hathaway has done it. Of course, in this case, the key factor is to give such a position enough time. The longer an investor holds a winning stock, the more valuable it becomes, and the greater the dollar gain becomes from a certain percentage increase in the price of that stock. An investor just needs to be willing to stick with a trade early on, even when a fairly large percentage gain doesn't necessarily translate into a large increase in the dollar value of his investment. The expectation that Berkshire Hathaway's long-term position will always outperform the market also assumes that it will continue to perform in the future as it has in the past. If its approach to stock selection and management of so many private businesses changes, a rethinking of its actual long-term growth will be merited. Until that happens, Berkshire Hathaway is an excellent choice with real potential to become a millionaire for patient investors who can put a significant amount of money into the investment. And here, finally, is the long-awaited answer. According to experts, the best strategy for beginners is to buy and invest long. This confirms the consensus forecast for the coming year 2025, which implies a Berkshire Hathaway BRKA stock price growth of more than 50%. Let's hope the forecast is realistic. We will soon find out. Our new interesting and useful videos are waiting for you. Don't forget to subscribe to our channel.